Welcome.
Thank you very much.
All right, so my first question is going to be it's probably a question that a lot of people have an answer to, but let's not take it for granted that everyone here understands what the blockchain is. So talk to me like I'm a 5-year-old. What is the blockchain and how does it work?
Okay, so I think just very summarily, I would say at that low level, a blockchain is a way to store information that will make it permanent and such that people can trust that the information is correct and will stay correct. That is in summary. Yeah.
All right. Okay, so what does Appzone do?
So basically, Appzone, we've evolved into a payment infrastructure company. We provide a blockchain-based network that connects banks and fintechs together to enable digital payments, initially in fiat, but also transitioning into digital currencies as well.
All right. So you just mentioned that you started out connecting financial institutions through fiat.
Yes.
And then you moved after a while to do that through the blockchain.
Yes.
What informed that decision?
So we saw that the architecture for fiat-based payment processing is kind of broken. And that's because two main issues. You have the hub and spoke architecture. So you have the connector sits in the middle and all the participants sit at the side. So they have to talk through this hub. So anytime there's a problem with the hub, nothing goes. And we see it when we want to make payments at the point of sale or ATM and all of that. We figured out that by creating a peer-to-peer based processing network, you can have all the nodes connect directly with all the other nodes and be able to achieve very seamless payments process and scalable, a lot more scalable than what we have today. The other issue is something called settlement. So for settlement is how do the financial institutions get their money at the end of the day after the transaction? Is a big issue for cross-border. That's why you don't have easy cross-border settlements, because you don't have any settlement mechanism. The blockchain serves as a decentralized settlement mechanism where all the participants on the blockchain can get value. All the institutions can get value instantly, whether it's for local or whether it's across borders using stable coins. So you have fiat. Each participant is using fiat in a particular currency, but you have a central currency, stable coin, that enables, it's like a common currency for payments to move, irrespective of. So the debit or credit can happen in fiat in different locations, but what moves within the blockchain is one common currency that makes it seamless for flows to happen.
All right. So I'm not exactly a blockchain enthusiast. I am probably on the fence about blockchain and its application. So one question I usually ask when I speak to people who are blockchain enthusiasts and they are so bullish on the idea is, does the blockchain necessarily make your business better than it was before now?
Yes, so it absolutely does. I mean, so it's not just our business, but looking at the industry as a whole, the future of the industry. So we think the future of the industry is decentralized. We think the future of digital assets is non-custodial. Non-custodial means that today in financial services, somebody has to hold your money for you, right? That's why you go to a bank and you put money and all of that. But what if he decides to eat your money, like happens with banks? Failed banks, that's what happened. Misappropriation, right? That somebody holding your money for you affects speed of payment. That's why settlement takes so long, because you can't move physical money quickly. Automation, it affects automation, all of those things. Transparency. So for us, a decentralized world of financial services, right? Fully mainstream. The asset is non-custodial, meaning nobody's holding your money for you, right? The processes, operations running on that asset, the financial operations, are automated with smart contracts, and they are transparent, vetted, even like approved from a regulator point of view, fully automated, fully transparent, with low cost. So you don't have intermediaries, so cost is low, and it's more innovative. Let me give you an example. Today, if you have a balance in a bank, you cannot use financial services from another bank on that balance. You cannot link your savings account in, say, GT Bank to a lending service in Zenith Bank. But with a non-custodial model, you can connect your wallet to different services. The other issue in terms of innovation is, today you might have an interesting financial innovation idea. You need a license to deliver it as a bank. To get the license, you need this huge amount you have to deposit. Why do you deposit billions to be a bank? It's because of custody. They're trying to make sure that if something happens to the money, you're backed up. But in a non-custodial world, any startup can come up with financial solutions. They don't need to have this huge deposit, right? Because they're not holding the money. Money sitting in a wallet is a DeFi smart contract, vetted properly, fully transparent. Everybody knows how it works, and it doesn't change. So you have a broad range of sort of solutions, right, that can work. Like it's a better, more thriving financial services ecosystem. So that's how it makes it better.
Okay. So in the main session earlier, we had a discussion about regulations. Yeah. And there were a lot of the speakers were actually okay with regulations in that industry. And a few days ago, I think just early this week, the SEC came out with some rules about how the industry should be or would be regulated going forward. And on the Techpoint Africa podcast, we were having this discussion about some of the, let's say, rules that was involved. Now, one of it was that CEOs, for example, have like a tenure. And you're talking about banks being required right now by the central bank to put up a certain amount of money. And you mentioned that the reason is so that we know that, okay, you can't run away because you're basically putting up a collateral for you to be a bank. Now, that in a blockchain-inspired world, that kind of sounds very nice that nobody has to do all of that. The barrier to entry is very low, if not non-existent. But does that not present a very significant issue? If I have a problem in my bank right now, I can walk in and I know that, okay, this guy has some, he has some responsibility towards me. It might not be 100%, but he does have some responsibility towards me. But if, for example, my blockchain wallet is hacked and my money is taken away, who do I run to? So don't you see that, or don't you think that it presents a problem for people who want to use the blockchain for transactions, financial transactions?
Okay, so in this scenario of your wallet being hacked, I mean, typically when wallets are hacked, is your key that is hacked, right? So somebody is holding your key and they're careless about it and your key is stolen and is used to take value. That's another layer, right? But if you have access, if you have custody of your own key, right, and the key, the address that key is linked to sitting on a blockchain platform, the address can be hacked. We've not seen a hack of a blockchain balance, right? So it's secure on that level. When it comes to the way people behave, so in the traditional financial balance, you're dependent on what people do, and what they do can change. With smart contracts, somebody has written a smart contract. Everybody knows how it works. It doesn't change. There's a governance process for it to change, right? So it's going to keep doing what it's doing. It's not going to try to take your value, right? So this on the fundamental level of the ledger, this is really, really very superior. On the level of hacking wallets, hacking your keys, taking your keys, that is, the regulation around that will have to cater for those kind of situations. So if you give a crypto exchange your wallet, your key for your wallet, or any other service provider, they would have to be interesting ways for that, the way those things are managed. And there are a lot of solutions coming up now on how to securely manage, keep custody of those keys. So this is the future.
Okay. All right. I'm not really sure it's the future, but I'll take a word for it.
Yes.
So now let's return to what you do at Appzone. Previously, you still serve financial institutions, and a lot of them are like legacy financial institutions, banks, and they operate in a regulated environment, but they've also been accused of being slow to innovate. And like they take a lot of time before they catch on to new trends. What has been your experience? How have they reacted to the move to a blockchain-powered solution?
Yeah, it's been interesting. You know, it seemed crazy when we started initially, and when we tell people that we now have all of the banks connected to our blockchain network. I think the reaction was one of excitement about the potential, but skepticism about the technology initially. So we had to do a lot of POCs, proof of concept. So you come in, they will say, okay, I'll approve a POC. I'm not approving to sign on yet. I'll approve a POC, do a POC. I want to see the results, then I approve. But we patiently walked them through, a lot of it happening last year, walked them through those phases. You know, we thought that when we have one or two of the big guys, the rest will be like, okay, we don't need a POC. But it just kept happening. We need to see. But in all of that, the excitement about the innovation was really there. It still is really there. Banks can be also slow because of their structure. Bureaucracy are really big and all of that. But there's a huge excitement about, hey, this is the future. We need to key in, which is why we now have that huge base. And we're now connecting the fintechs as well. The fintechs are faster. Of course, the fintechs are different, right? They are faster. They're really waiting. They just want to be able to improve the efficiency. They want to be able to connect and do stuff.
All right. So one of the marks of the cryptocurrency trading and everything is that it can be very volatile. Cryptocurrencies can be volatile. And so people who want to manage their risk kind of bet on stablecoins. But in the last 1 month, we've also seen that stablecoins are not stable. What do you see as the... Okay, so why are they growing in popularity, and what do you see as an everyday use case for them?
Okay, first of all, I'll say a proper stablecoin will be stable. What has happened is the algorithmic stablecoins were not tested for the kind of environment that they were subjected to. But a stablecoin backed by an asset will be stable. There's just nothing you can do about it. It balances itself out, right? So that is one. Now, in terms of why they've become quite popular, I think the main thing has been two main things: off-ramp, on-ramp into the altcoins. Very big. The second, remittance. Now, the first one is because for you to trade altcoins, it's volatile. So it changes, the prices change very quickly. If you try to off-ramp from fiat, even in dollar or pounds or naira, anything, the banking systems are slow to be able to move money in and out. So most people are more comfortable keeping balances in stablecoins so they can quickly swap it in and out of the altcoins because they're not volatile. So that's the big thing that's been pushing. The other big one is remittances. Yes, people sending money, because ordinarily they would have sent dollar, right? A stable coin that is one-to-one to dollar is the same thing, just an easier way to send dollar. But going forward, the last question, in terms of use case, what we see actually is that in addition to on-ramp, off-ramp, as well as remittance, where we're going to see stable coins, so two other areas are seeing stable coins play a huge role. One we're already doing, which is settlement, cross-border settlement. Like I said, you have disparate fiat currencies in different countries, and you have institutions and end users sending transactions. You need a central currency that you can use to settle the institutions. Stable coins play a huge role there because it's decentralized, it's on-chain, it's instant, and all of that. The second is payment, retail payment. So we're going to see like sort of regional stable coins evolve, where you can walk into a store and pay in that stable coin. Yes, you're going to see that alongside CBDCs. That's the future, the digital future of payments, the cashless future of payments in Africa is going to be powered by regional stable coins and CBDCs.
All right, so that's interesting. Do you see a future where stable coins replace unstable coins?
Replace?
Unstable coins.
Unstable coins. No, it doesn't happen. So there are different use cases. Completely. Like I said, off-ramp, on-ramp, payment, remittance, all of that. The altcoins are like, you need to see them like security, they're like almost like shares of, they're like shares of a venture, right? So somebody is trying to build a DApp. A way to finance the DApp is through setting up a token. People can buy that token. It's more as investing. You are investing in that DApp, essentially. That's what it is. So you're always going to have assets like altcoin assets that fluctuate. They fluctuate just like shares, right? They may not play a role for payment, but you always have trading on the exchanges. You always have people investing. People are going to be doing ICOs, like an IPO is always going to be there. And in the same way a company does an IPO, you invest in it, the company might fail on the stock market and you lose all your money. If a company you bought shares in goes bankrupt, even on the stock market, you lose your money. Same thing with the crypto ventures. When they do an ICO, they had an idea, something they thought they would get traction. They thought they would get adoption so they can scale. If they don't and you bought their token, you lose money. So it will always be like that. There's no like replacement. The only thing that will be replaced is what? What? Fiat. Only fiat will be replaced. CBDCs, stablecoins, altcoins will always be there forever.
All right. Okay, so one of your missions at Appzone is to replace cash with digital currencies. Let's talk about that. And before we start, about 95% of transactions in Nigeria and probably all of Africa is cash. The rest of it is digital. So what are you doing and what do you think should be done for us to get to the point where we do most of our transactions in digital currencies?
Yes. So like you rightly said, our vision is for digital payments and DeFi to replace cash and traditional banking in Africa. We don't say replace traditional banks. No, replace traditional banking. The process, not the entities. I've explained why it needs to happen, right? So first of all, starting from payment, the reason why you still have cash is because fiat has a physical component you can't get rid of, right? So transitioning from fiat to digital currencies automatically takes up, like you don't need to, there's been all these policies, cashless, don't pay with cash and all of that. There's an easier way to solve it. Just transition to digital currency. There's no paper. You can't get a paper version of it. Like, even if you wanted to, it just doesn't exist. Now, once that happens, you have full financial inclusion. Because everybody that uses a digital currency essentially has a kind of bank account, right, through which they can get financial services. And then, on top of that, you now build automated, decentralized finance to empower everybody with access to financial services. So this is the flow that we see happen. But we have to solve the key issues. Like I said, one, regulation. These things have to be compliant. Anybody hoping that there's going to be a world where you have adoption of cryptocurrencies without regulators backing it, forget about it. It's never going to happen, right? It's never. KYC, AML, exchange controls, those things are going to, and visibility, they are going to be a thing. The only time it can happen is if the world does not have governments anymore. Or we all become one world, become one global government, something like, and even if it's one global government, it will still be a problem. So that is one big problem. The second thing is interoperability. We need interoperability across the chains We need interoperability with the payment channels. So if you go to a merchant, online, POS, ATM, all those existing channels, we need interoperability to banking channels. We need interoperability to CBDCs because central banks are going to be pushing CBDCs really hard. And the third thing, like I always say, is ease of use. How do you present the interaction to the ordinary man on the street that it feels as easy as like using a bank account? Once those three things are solved, then you're going to have mass adoption. We kill fiat completely, and we empower, unlock freedom and financial inclusion for everyone.
All right, thank you so much. So you actually answered my last question, which was going to be around what needs to be done for mainstream adoption to be a reality. Yeah. Well, I think that answers the question. So thank you so much for your time, Obi.
Thank you. Thank you very much.